Hello, traders, and welcome to this live trading webinar. How are you guys? How was your weekend? Did everyone have a great weekend so far? Good morning. Good morning. I'm pretty well. Thank you so much. Sorry. Let's just start with the risk warning, of course, just to make sure that everyone's aware that this content is for general information only and is not intended to provide trading or investment advice or any personal recommendation, and simply any information related to past performance of an investment does not necessarily guarantee any future outcome. Please keep an eye on the podcast I will record later on, and it's going to be on the website, so you will get informed about the news for the week. And let's start with the calendar. Today is Monday, April 3rd, and early in the Asian session, we had a major event in Japan, manufacturer index related. Previous was 7, forecast was 3, actual it went to 1. So remember last week I commented about the 4-hour chart, if you recall. Let me draw it on the screen for you. Remember we had the 4-hour head and inverse head and shoulder like this. Sorry, forget this one. So we had the head, left shoulder, right shoulder, and we said on the USD JPY, and we commented that we expected this move to continue to the upside. We had an intraday on the lower time frames, pull back to the neckline, and then the market just shoot it higher. We expected today to see some more bullishness here. We're going to check the charts in a while. Later on, ISM purchase manufacturer index in the US, still below the benchmark of number 50, which means it's not the most positive for the dollar, but we didn't get used to any high volatility around this event or any major trend, any change. Anyway, this week, as it's going to be the first Friday of the calendar month, we will have the unemployment rate and non-farm payrolls in the US, and there is already a discounted in the number, so that's where the markets are going to pretty much pay attention to, and the rest I will explain them on the podcast. Let's check the premium analytic portal, ladies and gentlemen. Today's top headline: oil prices soar after Saudi Arabia leads coordinated OPEC plus cuts totaling more than 1 million barrels a day. And here, something from the kingdom. In an announcement yesterday, Saudi Arabia's Ministry of Energy stated that the kingdom will implement a voluntarily cut of 500,000 barrels a day from May until the end of 2023. In conjunction with other countries, as we already know, there is an official Russia, Saudi Arabia, Brazil, South Africa, and India, and we are not surprised that they are also high correlated in the energy sector, these 5 upcoming major economies. So we pretty much expected to see some world-changing order soon. Let's see what comes from the banking economy, from the banking sector. World Bank warns of lost decade for global economy. Individual investors slow stock purchases, leaving markets vulnerable. New York Fed's John Williams said will take time to reach 2% inflation. I don't know if they can reach it at 2%, and when they can, I mean, it's really, really terrible situation with the banking sector. SVB collapse complicates banks' effort to unload more than 20 billion US dollar of junk debt, and that's the thing. New York Feds, we read that one. Saudi lead oil producers to low output further. Paris votes to ban e-scooter rental companies. Okay. Electric scooter rentals lost in a landslide with 89% of the relatively few people who participate Sunday voting against the service. Finland's Sanna Marin defeated in election ahead of NATO ascension. Swiss prosecutors probe state-backed Credit Suisse takeover by UBS. Elon Musk revises old banking dream in pursuing 250 billion US dollar Twitter valuation. Okay. Google co-founder, other billionaires are issued subpoenas in lawsuit over JP Morgan's ties to Jeffrey Epstein. Pretty interesting, right? I'm sure many of you, if not all of you, could agree at least to the most of our comments here. Guys, at this stage, please make sure you like and subscribe on the YouTube channel, and also follow us on the Instagram page to get informed by all the reels and trading ideas we post every day, and also on the Telegram. And I put all the links on the chat boxes below, and we are ready to dive into the markets and see how prices discount all the events of the weekend and find out any today's intraday or later on during the day some trading ideas. So we start with the pound US dollar, and that's the daily chart. At this resistance, the market got rejected. It's trying to push lower. Although the market in a consolidation, the moving averages are not the ideal trading tool to use while markets are ranging. So we can apply support and resistance trading or range bounding trading strategies, like we sell at the top and we buy at the bottom. If you could find on the lower time frame some reversal type of pattern, like if we draw our trend line here, we have the two touches, the market make its almost equal high, falls break intraday, keep moving upward, and we have a break of this swing here. This move to the downside, we call it a non-failure swing, because the market already made a new high, and then it didn't came up to here and try to push higher and failure. It just went straight and penetrated the lowest point, the most recent one. So we have a broken swing on the 4-hour chart, and we do expect to see some more follow through to the downside. Here is the first target. If we're going to sell from here, or if we're going to dive to the 1 hour, 30 minutes, 15-minute chart, and so on, we can expect that the market, it's going to just push and come to retest at this area. And if it's going to penetrate and close below, then we're going to have this area as the S2, let's say that's the S1, support 1, support 2, and final target, if you're going to hold trades, it's going to be this support here, S3, because that's how the market is constructing the time being. So the euro US dollar, it didn't really came to this resistance. However, it's, let's say we are within this order block area here, and as I commented last week, if we're going to go to the 4-hour chart and we will try to find the order block, the very last piece of information, it's this one here. So I'm not in a rush to sell this one, to be honest. I will be waiting and be excited to see what the price is going to do when it comes to this point. Australian dollar against the US dollar. This area of resistance worked pretty well again, but here is a dilemma. Do we know if this is going to be the ascending, not ascending triangle, but we can, no, I don't like it. That's not valid. We have to touch the pinpoints and not to cut through the bodies. And if we're going to break below this trend line support, then yes, we can see the market falling all the way down. For first target, being mindful that if we're going to break below, we have to see the market come and retest this area. Let's call it support 1. That's for an end of day and intraday traders, of course, but for if you're going to hold positions, then if it breaks and closes below, that's the S2 we're going to look for. Then that's the S3 we're going to look for. Okay, you see, guys, from support to support to support to support, and that's how we trade. If the market is going to break higher and we're going to close above this area of resistance, then we're going to look to target this resistance and this resistance. The most obvious swings, actually. All right, to be more accurate. Theo, could you please have a look at Dow Jones in weekly and daily? Very thankful. Absolutely, Carlos. Of course. Guys, any other currency pairs or indices you would like to see today? The Kiwi, it's just in this sideways consolidation. If we can put some trend lines to map the price and see if any recognized pattern appears here, that we can trade. But I don't see anything. USD JPY, that's an interesting one. Let's go to the weekly to see how the market closed last week. We had this bullish engulfing. I like the fact that it gapped to the downside and then it ended up closing within this and take all the length of the body of the previous week's candle, and it's this one here. So that's what it constitutes the actual bullish engulfing. It's when we have a gap. When we come from a downtrend, then we have a gap in the price open. Usually this is on Monday, of course, in the Forex, and then we have a close higher than the previous period close. So this period, it represents 1 week. So that's weekly close. And someone definitely expect to see some bullishness and push the price higher. Then if we go down to the 4-hour chart where we spotted this nice inverse head and shoulder here, price break this neckline, and it's just moving higher and higher and higher. So that was a good pattern. So today I'm still expecting some bullishness to come, and I'm still bullish in this one. I will try to go down to the lower time frames, like the 15 or 5-minute chart. And here is a question I've been asked, and I read a lot of emails, and thank you for that, asking what are the time frames I tend to trade when we say lower time frames. And I don't have a specific time frames to trade, although I like on the lower time frames, I prefer the 5-minute chart because it gives the swings faster. That's all. Not because it generates more signals, but if, like this one here, identified that there is an impulse move, a swing. So if this one here, but before we go to the 5-minute chart or the 15-minute chart to check for entries, first I identified my pattern on the daily chart, or like that one on the 4-hour chart. And 4-hour chart was a reliable pattern, reversal pattern. We saw the confirmation of the break with the break of the neckline, and since the market start printing higher prices. So I'll try to go down to any lower time frame that will give me the pattern I would like to see, the impulse move, the higher high, a strong, solid line with quite few significant green candles. And then I will definitely be convinced that, hey, higher time frame, it's bullish, lower time frame, it's in an uptrend. So I would like to draw my feet from here to there. I will check where is the most recent broken resistance that it can act as support. In this case, it can be here on the 50, but also a very clear, it's around somewhere here on the 61.8. So why not to try to get involved at this area here on the lower time frame? USD CAD bearish from this point here. I mentioned that extensively also a few weeks ago. Sorry, last week, not few weeks ago. A few weeks ago, we said if we're going to break below, we're going to start looking for short. But last week, it was the catalyst. And it was this price action here, as you can see. And now you're going to tell me, okay, Theo, should I stay in front of the charts all day long to wait for the price action? And the answer is definitely yes. No, I'm joking. It's definitely no. You don't need to stay, guys, in front of the charts to monitor each and every one price action. First, and what traders, and here I will give you something insight about trading and how to behave as trader. The first thing you have to identify is not which market you want to trade. The first thing you have to identify is what sort of availability do you have to trade. Everything starts from there, because you don't want to force yourself to trade when the market is when specific markets, let's say, operate. First, we have to see what's your availability to trade. And then we're going to say, okay, based on your availability, these are the suitable assets, the suitable securities, the suitable Forex pairs. And based on this, then we're going to identify which one is your strategy, how you feel more comfortable, and what makes you feel more confident to take trades. Is it a trend trading? Is it a reversal trading? Is it a counter trend trading? And so on and so forth. And based on your availability, it's going to come down to, okay, if you have, let's say, 2 hours availability a day, and it's from 4 to 6, let's say, London time, GMT time, just to make it more, just to make it easier for everyone, because I think everyone understands the GMT time. So from 4 to 6 GMT time, it's a good it's a good liquidity in the during the New York session. All right, just I took an example. All right, so if that's your only availability to trade, then why to start looking for the Aussie New Zealand or for the New Zealand Swiss franc? There are things, specific things we have to start looking for. If your availability, for example, is only right now during the London session, then again, why to start looking for USD CAD during the London session at 8 o'clock to go intraday and trade the USD CAD? I'm talking about intraday now, okay? Because when you trade end of day, it doesn't matter at all. But for intraday, yeah, are you going to look for USD Canadian dollar when both markets are not creating any sort of move? Why don't you better look something like Euro USD or Euro JPY, Pound USD, Pound JPY? Why to look for Aussie CAD around for intraday trading from 8 to 10 a.m. GMT time? All right, and that's where I saw many traders struggle. They start working the other way around, and it really doesn't, it just leads to frustration. So first, you start from your availability, when you are available to trade, and then we're going to bring it down to what you're going to trade and how you're going to trade. All right, feel free to send me an email, or you'll have my email, I think, and I'm very happy to help you. Although my commitment in the job, it's extremely, it's too intense, and time, it's very pressure, but I will try to do my best and help you as much as possible. Okay, so let's move on. Euro JPY. At this, finally, last Friday, at this area of resistance, got rejected. And if we go to the 4-hour chart and check the order blocks at this area, which one was the nearest, you could see that it was this one. It was this one here, somewhere there, either this candle or that candle, with a high above here. And that's why all the time I told you, when the price is about to come to, and it's about to come to resistance, and you want to short, better use the ATR. It's an oscillator, and it gives you the average range of the candle. And the ATR set 73 here. It means now we are on the 4-hour chart. So if you're going to go to the 4-hour chart to place some trades, or that's okay, let's go to the daily chart. It's about 240 pips, the average range of the candle. I always take the half of it, and 200 and let's say 250, so 125. From this area, I will measure something like 125 if I would like to enter with limit order at resistance. So to make sure, if the price, it's gonna take some stop losses from previous swings, it won't be mine. All right, but you have to understand that in many occasions, the price doesn't just fall down like in one slot. So it takes some consolidation period, and that's where the candlestick activity comes to try and find reversal candlestick patterns. All right, again, based on your trading personality, that's where we build strategies to make sure it match to your personality and you feel comfortable and okay to trade them. All right, I try to include everything on the trading course I wrote. And this year we're going to record it. I believe by summer we will record it, and you're going to have the privilege to go through and understand many aspects of trading that they are crucial. Okay, so if you ask me to find something in this market, this is a reversal pattern. I will be looking for some shorts in short-term time frames, like the 5-minute chart. We have this higher high. Am I going to sell here? Of course not. I'll be waiting for some lower highs and lower lows to start looking for shorts. I explained that many times. Pound JPY, daily chart, pretty much the same scenario. Market reaches this area of resistance. And of course, the Aussie yen. However, this is not in a strong area of resistance, so I will keep myself away from that. Same with the Japanese yen and the Kiwi. Swiss yen, it tapped into this order block. However, to have an advantageous prices, I believe we have to wait for the price to come a bit higher. CAD JPY, very fast gapped and strong gapped to the upside. Fairly strong, the Canadian dollar. Euro, we have 3 minutes until the UK Open. Thank you so much for pointing it out. So the euro against the Australian dollar in this uptrend, we're going to look to get involved to buy. And let's check the crude oil. Do I have it here? Up. No, I don't have the crude oil. WTI. Guys, let's check the indices, and we're going to come back to the rest. So Nasdaq on the weekly chart, higher highs, higher lows on the daily chart. Very clear market to trade. We have the moving average crossed over. We have these higher highs, higher lows. Everything is bullish for trend followers. This is your opportunity to participate. On the daily chart, you can wait for some pullback. On the 4-hour chart, though, you can find those narrow swings and you can trade them if you want. Same with all the indices. Dow Jones, the same, very bullish. I will be looking to buy it. DAX 40 on the daily chart, same. We are approaching this area of resistance, and I'll be looking for a very fast buy stop here. All right, so I'm entering buy stop at this point, and hopefully the market is going to give the 10 pips. Stop losses, they're going to be at the low, as we know, and a sell stop here, but I don't think so it's going to be relevant. I think it's more relevant the buy stop, because the market, it's already took it. Let's see what's going to do. Remember, stop losses are below the lows here. If the market is going to close, I will definitely scratch the trade. That's the breakout strategy. And let's say that's 10. Let's check the FTSE. I'm holding some positions on the FTSE, to be honest, from down there. So I hope that the market is gonna keep rallying today. Nasdaq. Again, I will prefer, not I wouldn't, I would prefer to trade the Nasdaq during the New York session, and the Dow Jones and the S&P, without saying it's wrong to trade them, because I know HV and other guys, they are trading the Nasdaq in the London Open, but it moves better and faster. It has more volatility during the New York session. Yeah. Intraday indices, question intraday indices for the London. Yeah, it's the DAX and the FTSE. All right, if you're going to go scalping and you want to try 1 minute and 5 minute charts and this stuff. WTI. WTI. You see, guys, an enormous gap on the WTI. It came all the way here. Of course, there is some tendency from the market to fill up the gaps. And especially in the Forex market, that comes pretty fast. And there are many reversal traders. They're going to try to fill up this gap today. So we will be waiting to see what's going to happen. Gold, of course. Let's check the gold. On the weekly chart, we had these lower highs and lower lows on these two candles, as you can see. If we move to the daily chart, the market put this kind of maybe we can call it as the pole and the flag pattern, but we have to see breakout as soon as possible, because this is very short-term pattern, couple of weeks max. If it's not going to play and the price this week it's going to just drift sideways until Friday, then we scratch it as the pole pattern continuation. Going to see what's going to happen with the non-farm payrolls. S&P, Dow Jones. We'll see if this is going to recover. That's 1 minute chart. Okay, guys. So I will leave you for now. Remember, if this is going to come down where our stop losses they are, we have to scratch the trade, of course. If it's going to keep higher, we have, for some people is 10 points, 10 pips. For other people, it's a bit more. Just monitor the trade. Remember, this is scalping, nothing else. So don't be very greedy with these trades. Okay. All right, traders. It was a privilege and honor to host this webinar for you. And here at Admirals, we like to wish you to have a lovely day. Okay, and looking forward to see you again tomorrow at the same time. Thank you so much.